Hi, this is James from McKay Research. I hope you're all doing well. Now, this week I wanted to talk about data again. This week's slightly different though, because we hear a lot about price data. Everybody wants to know what the Bitcoin price will do tomorrow, a week from now, and even a year from now. And the direction of the Bitcoin price, of course, has a big impact on all the other digital assets. So in this video, we're going to completely ignore price data for once, instead do an overview of all the other key forms of data and statistics that are really driving a lot of the announcements and decisions that we read and hear about in the financial press on a daily basis. From the changing attitudes and opinions towards Bitcoin from both boomers and millennials, to the integration of Bitcoin into a traditional multi-asset portfolio and its performance, as well as some of the fine detail on the regulatory implications behind many of these big corporations that are now drawing down their dollar-denominated cash balances in favor of Bitcoin. Okay guys, so I'm just going to take some time to go through some data on attitudes and opinions of investors on Bitcoin and crypto assets. Now, I think it's very easy to get carried away in the euphoria that we've seen in 2021 and just assume that that's always been the case. We all know that it has not. There are many doubters and detractors that have been very vocal over the years about Bitcoin's likelihood of correcting to its intrinsic value, which of course is zero. That's proven not to be the case. And many of those doubters and those who were sort of in the category of spreading FUD have now since changed their opinion slightly, which is absolutely fine, and that's actually good. They can see that perhaps they're applying old world thinking to a new paradigm, essentially. But all the while, it's important to realize that the wealth management industry has been, keeping a very close tabs on the attitudes and opinions of investors towards Bitcoin in particular and crypto assets in general. And there have been a number of global surveys that have been conducted by wealth management companies and investment houses that have produced data that is actually quite revealing and interesting. So one study that has been making the rounds in the last few years is by a wealth management company called the DeVere Group. And they, for example, found amid their high net worth individual category of client, that 73% of them actually were already invested in Bitcoin, and those that weren't yet invested plan to do so by 2022, which shows that there's quite a large uptake already of Bitcoin among that segment, who are typically slightly older as well, the high net worth individual category. Now, another reason why that's interesting is the high net worth individual category, they have quite a unique set of challenges compared to your average private investor. Of course, a lot of the social, economic, and political instability that we've seen globally has come to bear on their investment portfolios. And they've increasingly been looking at different ways to diversify, both in terms of asset classes and from a geographical standpoint. So Bitcoin being, of course, not tied to any particular jurisdiction, or at least in theory, has been something that's become more and more popular in that group. And other alternative investment asset classes, such as citizenship by investment, for example, that's another one that's has proven very, very popular with that group over the last few years, as again it facilitates the degree to which they can structure their portfolios and their investments more globally. Now, the other thing that's very interesting to look at here is that Bitcoin is typically looked upon as something that is a young person's game. Typically, it's the millennial investors that are more tech and digital savvy who like to invest in Bitcoin and prefer to other asset classes. But actually, the data shows that's not necessarily the case. So again, for example, a global poll conducted by DeVere Group, which I have in an article here, for example, shows that they found that 70% of those aged over 55, again, of their client base, were already invested in digital currencies, Bitcoin and others, or were planning to do so this year. And I think that was taken from a year or so ago. So this is not just something that millennials are interested in. It's something that suits people from all different ages and backgrounds. Now, we do know that cryptocurrencies, of course, are very popular with the millennial demographic group. What's very interesting again here is to see the degree to which they're actually favoring Bitcoin over other asset classes. Now, as early as November 2019, there was a paper that was conducted by Edelman's Wealth Advisors, and in a paper called the Millennials and the Future of Money, they found that 63% of cryptocurrency users were of the view that Bitcoin was a better investment than gold, for example, in a volatile economy, which is, of course, what we have now. So the chart that I have up on my screen here is a very interesting one conducted by the Tokenist. Again, I'll post all the links to these studies in the description below. They conducted a survey across 17 different countries. I think it was a total of 5,000 participants. So they ran the survey in 2017, and they did it again in 2020. And what they did was a comparative analysis between the 2 years to see the degree to which attitudes around Bitcoin relative to other traditional investments had changed in that 3-year period. And what they found here was that in the vast majority of categories, so here we have bonds, stocks, real estate, and gold, in most cases, there was a significant difference in the attitudes shifting towards Bitcoin. So here, for example, we can see for bonds, almost half of all respondents indicated that they would prefer $1,000 worth of Bitcoin over bonds. And indeed, in the case of bonds, again, that was a 13% difference in the past 3 years. Now, for stocks, still more investors prefer stocks than Bitcoin. But for the other categories, again, we can see that there's differences in attitudes. Again, more people in 2020 rather preferred Bitcoin than in 2017. And once again, for gold, it's the same. So again, the idea of Bitcoin as digital gold, we can see it's really gaining traction, and that's very much manifest in the data that we see here, which measures the difference in opinions between these 3 periods. So this next chart that I wanted to look at is all about portfolio returns. So it shows Bitcoin in context of a traditional multi-asset portfolio. And specifically, it shows how adding 1% of Bitcoin to a traditional portfolio has really outsized returns over a 10-year period. So basically, what this measures is 2 different portfolios. One that's sort of split 50-50 between global equities and global treasuries. The other is 49.5 of stocks and 49.5 of bonds, but 1% Bitcoin allocation. And here we can see that over a 10-year period from 2010, we can see that the portfolio that was 50-50 stocks bonds returned 6.6% on an annualized basis. And with the 1% of Bitcoin added over that period, we had 104.5%. That is a massive difference, of course, and in a way is not surprising that Bitcoin has outpaced pretty much every other asset class over the last 10 years. There is a downside, of course, to that, however, and that is looking at this middle column here, we can see that adding Bitcoin to a traditional portfolio obviously has a huge impact on volatility. Here we can see that the 50-50 stocks bonds portfolio is only 77.5% in terms of annualized volatility, whereas Bitcoin we have 86.3%, which is a huge difference again. The Sharpe ratio, I won't get into that for now. So we can see that while Bitcoin has a outsized impact on annualized returns over the past 10 years on portfolios, its volatility does obviously present headaches to wealth managers who have a fiduciary responsibility to advise their clients on the relative merits of Bitcoin as an investment. But of course, integrating an asset that's that volatile into a traditional multi-asset portfolio is difficult and presents challenges. Last chart that I wanted to share with you is one that some of you will be familiar with already. It's basically just a list of the public companies with the largest Bitcoin holdings. Now, again, MicroStrategy should not be a surprise. They've been accumulating Bitcoin quite vocally since August 2020. Their current Bitcoin position, I believe, is valued in excess of 3 billion. It's probably even a lot more by now because they are accumulating hand over fist, and as the price dips, they'll probably be doubling down as well. Now, this definitely is a long-term trend. You're not going to get this number of public companies investing these dollar amounts into Bitcoin or any other asset class for that matter, just for short-term gains. They see the investment potential behind it. They're also trying to secure their cash position due to the increasing uncertainty of the dollar, as more and more inflation will inevitably creep in to the wider economy as more handouts are dispersed to businesses and individuals during COVID-19 and other factors too. But what's not discussed as much, however, in this cryptofication of public companies are the risks involved. Now, taking Tesla for an example, I mean, a huge 30, 40, 50 or more % swing in the valuation of Bitcoin could have a huge impact on their bottom line, and that's the same for any of these companies that have invested a significant amount as well. Now, there's a lot that's been said as of late about the issues around power usage in Bitcoin. It's very, very well known that running nodes and mining of Bitcoin is massively energy intensive, and the perception is that's, of course, for the most part coming from dirty energy, particularly as a lot of the miners are situated in China. So for many investors, his rather public and euphoric investment into what is considered by many people to be a dirty asset is fundamentally at odds with the raison d'être of his company, which is supposed to be all about sustainability, clean energy, decentralized power grids, and everything else. Now, there are other risks as well, such as the fact that wealth managers and many of their clients still consider Bitcoin to be a relatively speculative asset, irrespective of its price movements. Now, companies that are acquiring large unhedged positions of Bitcoin could find themselves completely ignored by investors and portfolio managers due to the perceived mismatch of individual risk that we discussed in the portfolio chart previously. Finally, I think it's worth pointing out that these public companies and their CEOs making loud and proud announcements on Bitcoin purchases could actually land them in some trouble with the regulatory authorities. Now, the SEC, for example, they have very specific rules on the nature of making public statements on a company's financial condition. And these rules don't necessarily sit well with making these, as I say, big announcements on investing in Bitcoin. And so it's not very well known that actually Elon Musk, given his stature and his ability to move markets with a single tweet, he has almost like a private agreement with the SEC about the nature of his pronouncements on Bitcoin and what he can and cannot say. And he's actually really landed himself into a fair bit of trouble. Now, this is something that the CEOs of companies that are still sitting on the sidelines with respect to Bitcoin investing need to monitor quite closely. Because should the SEC, for example, take the view that your MicroStrategies and Teslas are flouting the rules with respect to making public announcements on Bitcoin to feather their own nests, as they see it, then they could actually change the rules quite quickly and suddenly curtail a company or a CEO's ability to make public statements on Bitcoin holdings or new investments. Okay guys, I hope that was helpful in providing a high-level overview of some of the other forms of data other than price that go into driving this industry forward. Now please let me know in the comment section below whether you have other forms of data that you like to use when gauging the sentiment of this market, and I will see you all in the next video. If you enjoyed this video, please like, share and subscribe. It would really help the channel grow, and don't forget to drop a comment on this or related subjects in the comment section below. Thanks for stopping by.